I'm on it. I'm on the channel.
I'll be in the chat as well, telling people to smash the like.
Hello, welcome everybody to Monday's edition of Trade the Chain. I hope I didn't say that earlier than it went live. It is Monday, May 24th, and there's a little more of a chipper mood amongst the team here. And obviously you saw the title. So we actually are going to go over the Bitcoin market today, and what you guys can expect, from a couple different angles over the course of, let's call it the next week. We all suffered a lot of pain, especially this weekend. So hopefully we're a glimmer of good hope or good news. Don't ever hope on us, but hopefully we're a glimmer of good news as we start out this trading week in crypto. Joined with my co-host Ryan Gorman, best hair in crypto, along with CJ and Monty from MarketRebellion.com. And Ryan, why don't you take us away? Let's get this show started.
Yeah, buddy, let's get it. Thanks, Alex. This is just a reminder that all content provided by Trade the Chain and Market Rebellion is strictly for educational and informational purposes only. Absolutely none of this is investment advice and should not be construed as such.
All right. And 1 second while I allow for screen sharing.
You were too busy messing around with the filters before you went live, Alex.
Oh, I love those Zoom filters.
At least you didn't end up like a cat like that lawyer. All right, there's the disclaimer. And on to the plugs. Trade the Chain is brought to you by TradeTheChain.com, a global community of traders across 23 time zones, people. We are everywhere. All using AI-driven sentiment indicators and actionable alerts to help them beat the market. If you too want to trade like a crypto insider and get some of that sweet, sweet sentiment action, check out TradeTheChain.com.
Ryan's fired up today.
That's because the market isn't continually going down. It was down so much, Alex. Too much.
And we'll touch on that, folks. Okay. But first, MarketRebellion.com/crypto. This is Monty and myself and our community over at Market Rebellion. And with us, you get exclusive access to trade insights on a weekly basis with entries, exits, and stop losses, as well as access to our macro portfolio allocations, a pro charting platform, a trading education curriculum, and an elite community of traders all throughout the world, and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. And you can start your first month trial for just $1 at marketrebellion.com/crypto. We got a mobile app as well for iOS users. And we also are dropping some courses earlier. I can't guarantee it'll be today, but it will be this week. We got one on moving averages as well as the DMI indicator, which I'll talk about today as well. But gentlemen, start us off.
Yeah, well, first of all, I just want to say that we have a dislike, and we haven't even started the show yet. So I think Peter Schiff is watching. He may
have heard my promo from all the way out in Dorado. I was
you're pretty loud there, Ryan.
Yeah. For everyone who loves to call me Paper Hands Gorman, I didn't hit the sell button once during this last move downward. So
that's because the exchange he was on wasn't working.
No, I just held on to my conviction. I believe that things will improve and get better, and it was a good bargain shopping opportunity, if anything else. So.
It was. I want to point out one quick thing, and that's Luna. That thing suffered heavy, down 73%, going into the bottom of what we call the market, and it was a quick pop up to 33% today. So yeah, there were some deals to be had, Ryan.
Absolutely. No, it's things are definitely looking up, especially when you start to look at the sentiment scores on some of the bigger coins and how they've turned around since this time yesterday, especially Bitcoin. Bitcoin was the most bearish I had ever seen it, really, and we're kind of in a neutral, bullish stance right now. So I think, maybe people are starting to get back into the swing of things.
Well, I think CJ and Monty are definitely going to go over what their opinion of what happened so far is, and I think getting into the swing of things is going to be one of those weak hands, strong hands, everything in between hands. CJ, it's all yours, bud.
There are so many interesting charts, weekly, daily, various perspectives we're going to explore. Little bit of a clickbait title, but that's just the game of the YouTube algorithm. But we actually do have one specific indicator that I want to point to that is ultimately going to provide confirmation of potential further bullish price action. Doesn't mean it has to happen, of course, but I am very interested in exploring this one. So first, I want to look at the traditional stock market because we had one of our lead analysts named AJ Monty, the option oracle, call for a top in the S&P 500 or the stock market in general on Friday. And he famously called the top in 2000 with lawyers around and various witnesses and such. So he's a great technician and has been remarkably accurate throughout the course of his career. But I have to say, we just had some really bullish news regarding like COVID and the fact that we're hitting cases that are the lowest since the start of the pandemic. We're going to have probably a full-on opening in June. We might have some additional stimulus. So I don't know. I mean, when I look at the expert fundamental analysts who are looking at things like the S&P and future bullish price action, I tend to listen to Fundstrat and Tom Lee. He's been remarkably right ever since the beginning. And, they're still bullish over there. So from a technical perspective, unless we put in some type of higher low, I just don't really see a top in the equity market and traditional finance, which is good for crypto, right? We're still holding these moving averages very strongly, and we'll just have to see if we can create new higher highs. I think if we do that, it bodes extremely well for the future of crypto in 2021. But with that said, let's check out Bitcoin and specifically what we're seeing on the one-day chart. So we are in a very strong bearish trend. However, volume is declining, and ultimately we're running out of sellers. Like literally, I was talking to Alex about
How
this.
are any left? How could there possibly be any sellers left at this point?
Yeah, no, I mean, there's no more liquidated capital. It's all been transferred from traders to the exchanges. But
well, it's so funny. CJ and I were chatting earlier this morning, and he goes, "I think everybody's liquidated. There's no one else to go."
I think that's what we're going to see in the short term too. If we can get a nice bullish engulfing candle on the daily here with some high volume following that hammer, it looks like we're pretty likely to see at least some type of reaction rally into some of these resistance levels, namely the strongest one, which will probably be 45K as our moving average comes down. So I do think we're going to have a reaction rally and touch this particular level. I think the technicals are setting up for that in the short term. However, when we look at things like the weekly chart and kind of longer term perspectives, we do have to kind of still worry about these levels in around 25K and potentially 29K in a retest of that if we cannot close above this SMA. I really like this channel as well that was pointed out by one of our community members known as Josh Nardi. Thank you for that, Josh. I really like it and have now incorporated it into my own analysis. But one thing that I think is important that we should watch from a long-term perspective is this 20 SMA on the weekly chart, because in 2013 and 2014, we never really closed below it. We came down, kissed it, and got some nice support off of it. And we're pretty much doing the same thing in our current trend. We're coming down. We closed just below it last week, yesterday at 7 specifically. And we'll have to see if the trend can rebound. I think if we rebound and close back above this level, it bodes very well for the overall trend, not to mention just how exhaustingly negative everybody is on Twitter and social media. I have not seen the market more bearish than this since when we fell from 6K to 3K in the bear market, and people were calling for the next demise of Bitcoin. That's the level of fear that is out there right now, and it makes me pretty bullish. But to the indicator, which everybody has been waiting for, and this one is known as the DMI, also known as the Directional Movement Indicator. And I want to show you how we could have used it in hindsight to kind of locate this particular top on Bitcoin. So this yellow line symbolizes positive directional momentum. This teal line represents negative directional momentum. And so as you can see, we were pretty much above that the entire time. We were creating these higher lows, or excuse me, we were creating these lower highs throughout the bull trend. And that ultimately shows us that even though we're creating higher highs in price, we're creating a bearish divergence in the bullish momentum of the DMI indicator. So when you have that bearish divergence, it means that the trend is running out of momentum and is probably going to switch. And we saw that switch. We saw it right here at the top. And we came down. That wouldn't have been the signal to get me out of the trade. The signal to get me out would have been this level here and this role reversal. This acted as support for the yellow line all throughout the uptrend. But once this turned into resistance and gave us that kiss of death, the market just bled out profusely and continues to do so even. So what does this mean going forward? Sorry, Ryan, I'll be done in like a minute.
Oh, no, it's fine.
30 seconds.
All day, CJ.
All day.
But the thing that really is great about the DMI that is also added into it is known as the ADX. And so the ADX at a length of 14 is the standard. This measures the strength of the direction of the trend. So check out some of these peaks and troughs in the ADX, because each time we peak in the ADX, we typically reverse and go into a new trend. So I want to highlight these historically so you guys can get an idea of what I'm talking about. But we're very strong in terms of the ADX in bearish price action currently. So what I am looking for is a drop below our current value of 47. Because notice, each time we fell off one of these peaks, we reversed the trend. And right now, we're trending very strong bearish. So if we get a close below this 47 level in the next day or two, and the way that this is calculated is based on closing prices of the day. So we're going to have to wait till a close this evening to see if the value of 47 drops. If we get a massive bullish engulfing candle, some positive momentum, this will close below and it will create a nice little peak, similar to like this, and this. So that's what I'm going to be watching for ultimate confirmation of a reaction rally, at least for the short term. I think it's a little too early to rule out lower price levels like 29K, but that's going to be a really nice indicator that I'm going to be watching for this evening.
So what people that may be new to crypto are wondering, and maybe this is something that you, Monty, can help them understand, is why when crypto falls, does it fall so rapidly and by so much when compared against, say, equities, right? Because people lose money in equities all the time, but it feels like these moves gain so much more velocity, so much more quickly, and they go so much further than they would on a percentage basis in equities.
Yeah, Ryan, that's a great point. And I think, the answer can be summed up in one word, and that is leverage. Bitcoin and crypto in general, the retail market loves to use leverage. And we saw, record losses last week for Bitcoin holders. Glassnode put out a pretty interesting report here. And as you can see, we had a record week last week, not just in terms of, volatility, but in terms of all-time high losses, 4.53 billion in losses.
Wow.
Just last week. So that's a new record for Bitcoin. And I think it all boils down to leverage. We had a ton of retail participation in the space, lever longs. And, when that happens, there's just tremendous incentive for the bears to short the market. And, it just creates massive, massive volatility. Here's another, kind of indication of a similar metric, Bitcoin net profits and losses. And as you can see, it completely fell off a cliff. We had a net daily loss of 2.56 billion. And, I think you can also attribute that volatility to the fact that we saw this much volatility volatility to the upside. You know, when we're getting a bit of lackluster P&L, you know, we don't get as much volatility. You can see that in 2018, it was relatively a stable market. But now that we're getting such tremendous moves to the upside, it's only natural that we get these moves to the downside as well. So I think, you know, just the presence of leverage allowed us to get up to this high, but it also made the crash happen a lot faster. So, you know, you guys made a good point. I don't know if there are too many sellers left in this market. It seems like all the longs have been liquidated and we're kind of hitting a plateau here at the bottom. So I think the grind up is going to be slower as well because, you know, people got burned on the way down. But that's okay. We're going to have some more organic, natural growth, and I think that'll be good for the market.
And also, when looking at the markets and why they went down initially before, you know, leverage took hold and really magnified this sell-off, what role do you think what's going on in China with the regulators? They're just kind of clamping down on all things crypto, including mining. Miners are moving out of China, it looks like, if all reports are to be believed. What impact do you think that that's having on the markets and sentiment around them right now?
I want to show a tweet because it sums up what you're talking about pretty well. From Nate's here. Oh, sorry. Let me go back. This is I mean, obviously you can call it FUD or you can just call it news, but this was the news that was thrown at us relentlessly throughout the past few weeks. And Ryan, you're right. It has definitely accelerated selling. But ultimately, this is kind of the fight you phase. And so we'll see how that plays out. But you're right. Tremendous FUD and news being thrown at us. That's why I think it's so nice that we're actually getting positive news coming out of, you know, having low COVID numbers, because we really haven't had any good news for the past couple of weeks.
That's the whole problem with the crypto markets in general, is that you can get, you know, a silly tweet from a billionaire idiot that kind of tips the scales. But then it's accelerated and the velocity just, you know, rolls faster and faster when it starts getting compounding with these negative narratives. And so, you know, I don't know that we'd be in the same place if China wasn't a second leg on that, you know, downward negative news. And so to your point, CJ, earlier, there's so much fear and so much FUD that's just going around. I think it's really sentiment driven, and it's unfortunate.
Yeah, it is unfortunate, Alex. And you know, the last week has been tough, but Sergeant Griswold in the comments makes a great point. These big dips are awesome opportunities to load up on alts, and I do think that there were some winners over this past, you know, couple of weeks during the sell-off. I want to give a shout out to your boy Nick Mancini, because he's been tweeting some great stuff today, and I think this right here is pretty striking data. The monthly DEX volume. So I always like to look for you know, crypto plays that are sort of bi-directional and that would benefit from volatility to either side. And the DEX space is definitely one of those. So we've seen, you know, Uniswap and SushiSwap and KNC sell off over the last week during this massive sell-off. But the fact of the matter is the metrics that bolster their utility are actually looking very strong. You know, we see the same thing happen with traditional equities like Coinbase. You know, you would think that Coinbase would go up during record volume, but it actually goes down. It tends to just move with Bitcoin. And I think that discrepancy in, you know, actual value and the perceived value of either the stock or these DEXs provides a really unique opportunity to play this space. So just look at this volume that we saw in May. Yeah. It's record volume. I think that DeFi got hit really hard, and that retail money is going to be looking back to DeFi during this period of a dip. So I think there's just so many opportunities in this market, and I'm really interested to see what people are going to be buying.
Monty, this goes with the thought of directional trading, right? You know, you say there's, you know, good opportunities to be had. You have this reactional you know, bull reversals that happen every so often, and when you have such a steep decline, this is a time where if you do have that dry powder, or you know, you're moving into positions and you're swing trading to the upside to kind of correct your P&L.
Yeah. This is a great opportunity to do that. Like you pointed out with Luna alone. I mean, that thing, it made a move today that would, beat most equities over a period of a year. So it's really important to keep that dry powder ready. And this has been a tough one because, there's been a lot of dips that have felt like the final dip, but I think we're finally hitting that point. So if you have dry powder, I would say now is the time to put it to work for sure.
How long do you think it'll be until, because that's a great point you made about Coinbase's stock and the value of Bitcoin. How long do you think that it will be until, if ever, there will be a divergence between what Bitcoin does and what the actual value of a Coinbase or a Voyager or these other publicly traded crypto platforms are? Because as you pointed out, they make money off of transactions and fees. So it doesn't really matter which direction the markets are going, up or down. It just matters that there's activity and volume. Right? Do you think there ever will be a divergence there?
100%. I mean, just working on that side, this has probably been the most profitable month to date for exchanges because of the volatility. Volatility is, to your point, Ryan, is where they earn their fees and where they generate those revenues. And when they're public and those, quarterlies come out, that's a great way to play the market no matter which direction it's heading in. It's all about profitability. So, yeah. Sorry.
No, I was just agreeing with you.
So where do we go from here? CJ, Monty, you're always good at giving us both directions as far as cases are concerned. CJ, let's start with you. If we're going to have a reversal now, and you're waiting for affirmation over the course.
Confirmation. Affirmation, I think of the guy saying, God damn it, by golly, people like me.
If we have a reversal, where do we see that reversal going? Monty just mentioned he's looking for a slow climb up. Do you agree with that, or are we going to have some velocity to a hockey stick here?
Yeah, that's a really good question. And let's ask the charts.
And do you think we'll still hit those price goals, those lofty price goals that you were talking about, say, a couple of weeks ago by the end of the year?
Oh, you mean like 6 figures over 100K? Yeah, that has not changed. And the thing, like, we could go to 25K and still make over 100K by the end of the year, because like Bitcoin's implied volatility is still, like, we're still seeing a majority of gains come in like only 3 or 4 week periods. And if you look at 2017, you can see that it's pretty evident as well. So I'm bullish right now. The question is, does the trend have enough strength to break through these resistance levels? Because what could happen psychologically to the trend is we could go up and have really bullish price action, go even above 45K, and a lot of people could get really bullish and say, all right, the bear trend is over. Then the moving average comes up and rejects us even further. We kind of get that touchback, former support then becomes resistance, and we go down into some of these bottom channels like the 30s or possibly even the 24s. That could be the absolute bottom, because people will absolutely give up at that point from a sentiment perspective and from just an overall bullish perspective. I think that would get a lot of people out of the market and would really change the sentiment about Bitcoin. Ironically, that's probably the best point to buy and where we will probably end up bottoming. The other situation that I see is that we just go up really, really fast and accelerate, like what you mentioned, Alex, and we just blow through these resistance levels, maybe find support at a higher level. If we were to create a beautiful little higher low like that, that is a great sign for the trend. And that would make me very bullish to potentially go back to the 60K level. Now, weekly chart. We have to hold these levels though, otherwise we kind of risk going back down. But overall, I'm still bullish in the short term. And that's just a little bit more further in-depth look.
Well, Mr. Short, give us the bad outcome.
I think CJ did actually a pretty good job of laying out a pretty negative outcome. And I do agree with him 100%. I think that there is a high likelihood of another bull trap coming in here. You know, we have some critical levels here, and 42K is one for me that I think if we can get above and close above, it might kind of invalidate a retest of 30K as a possibility. But I think that, you know, what CJ's laying out is actually pretty likely. We have a sharp downturn here in the moving average. You know, the RSI is telling us that we're very oversold, but we did see a similar retest of this level back here when we were still up at 48K. This has a lot to do with just momentum. And, you know, because we're at the bottom of it doesn't mean we're at the bottom of the trend necessarily. But I will say I'm kind of encouraged by these daily candles. We got this hammer candle here, followed by a bullish engulfing candle, but we're approaching this critical level of 39K. You know, I think that there is a possibility that we would get rejected here. I think that would be actually a better case scenario for Bitcoin, because if we do break above this SMA right here and possibly break above this level and get ahead of ourselves too quickly, I think we're in for another period of pain. I don't want us to necessarily break to the upside too quickly. I think that if we can kind of consolidate around here, you know, get some more natural organic growth, allow sentiment some time to, you know, catch back up, I think that would be the best case scenario. But like CJ said, 25K is not out of the picture yet. I think that because of the fact that we, you know, have seen record losses in the last month, you know, of numbers like $5.4 billion in losses in just a 30-day period, people are still going to be reluctant to enter this market. And I think CJ also makes a great point that, you know, the true bottom isn't really in until people have given up. And I feel like we're not quite there yet. You know, people are still somewhat positive on Twitter. You know, there's still people holding on profusely. I think there is still, I think sentiment could go even lower. So, you know, people are quick to jump in, but I would just say be patient, wait for some confirmation, and, you know, don't be too quick to jump back in, because you can get burned. There is still more room to the downside. So just be patient.
What do you think the likelihood is that we dip below 20,000? Does anyone think that that's at all possible? Because so many people have said Bitcoin will never go below 20,000. But we've come closer than I thought we would.
If we go there, then the stock to flow model and the whole idea of closing the year above 100K, I think is completely negated. But I don't see that being likely. You know, I think in order to go to those levels, Bitcoin has to have some type of external fundamental thing change. And to my mind, that most critical threat is a massive downturn in the equity market. If we see that, Bitcoin and crypto is going to have a very difficult time.
Yeah, I agree. I saw George in the chat mention about inflationary numbers and stuff like that. You know, my one caveat to this whole market cycle is the traditional equity market, and you know, if that goes, I'm calling the end to whatever cycle we're on right now in crypto. That's just my hard, steadfast thought. The problem I'm having, and just to dip to the traditional side real quick, is that one of those really important consumer confidence indicators in the equity markets, the housing market, is slowing up tremendously. I don't like to particularly see that when, you know, the housing market starts slowing up tremendously. It usually trickles into the equity markets because it's an indicator of people's beliefs into the solidity of the market levels now. So I'm curious to see what repercussions or what comes next in that cycle is. And the only reason I bring it up is because I'm curious to see how we progress through the equity markets, because that's going to be my determination of when this ends.
I think, you know, the economy isn't really going to tank through the end of this year, and that should hold up the stock market, right? People are finally having restrictions lifted or eased and able to get out and spend some money, go out to eat, go on a trip somewhere. Kids are going back to school in the fall, at least in New York. They're not doing any distance learning anymore, remote learning. I feel like the increased economic activity from people not just sitting at home staring at the four walls of their homes, I think that's got to boost the economy to some degree, right? Like, and the service sector and all these other parts of the economy that have kind of been dormant, they have to get a boost from this, and it should help overall with the health of the economy.
I agree.
I think
I agree. I just want to know. I want to know if it's going to be quick enough, right? How long does that take to that stimulus from the population take to cycle into the economy, and then coupled with the amount of money that we've already printed going through the pandemic, it's going to be largely dependent on what the administration does to just ease the markets as a whole and try to make it steady for the next, let's call it 8 quarters at this point with the amount of trillions we've printed.
Don't forget about the trillions printed before the pandemic either, during the last couple of years of the previous president's term. I mean, it was nearly unprecedented, if not unprecedented. So, I mean, that bill's going to come sometime, no?
Yeah,
I agree. Sorry, go ahead, CJ.
I've lost many battles trying to fight the Fed and short the market in certain instances. So I've definitely learned from that. I think one thing to keep in mind as well is that although we do have all this good news about reopening, markets are typically priced in 6 months ahead than where they actually are. So the market is already pricing in a lot of that positive expectation of the reopening. I think if we don't get earnings numbers that fit the expectations of that reopening, it could be trouble. But I don't think there's any signs to indicate that as of now. One last chart I'll share about Bitcoin is another one from the Glassnode article that we saw today. And this is net unrealized profits and losses, and basically shows a lot about sentiments based on how profitable the traders are that are sitting in the market currently. And one thing that I noticed is that we actually did hold support here like 4 or 5 times during the course of the 2017 bull run, and then over 3 times over the course of the 2013 and 2014 bull run. So, I'll be watching this. I'll be looking closely for Glassnode's next release of kind of where this data ends up. I think if we fall below and enter a period like this, then things will change considerably. But from a mentality, I think if we can bounce back, find support at this level of 0.5, it'll bode well for the overall trend. And in terms of the stock market, we only need like 6 more months of neutral price action to allow for time for the crypto market to thrive and actually finish the stock to flow model at around 150K.
I mean, that's pretty much all I'm praying for right now is good earnings. We only need like one more 2 quarters of earnings to be positive overall, just to allow for this to carry through, man.
Please.
Doge to $10. Just kidding, folks. I'm gonna get a new dog and name it Shibu Inu. All right. Well, I'm positive about the sign. Like I said, I think you guys are correct in what your outlook is as far as signals for the market coming up. And it's just good to hear. It's positive to hear. I'm glad we got we consolidated a lot of the sellers. So let's see what keeps coming. We've had a bounce, and it's only been intraday so far. So let's see if we can carry this through the evening. Let's see if we can carry this through the week. But we're here. We're here taking this journey with you guys, and we will see you tomorrow. Thank you.
Thanks, everyone.